Hello and welcome everyone to another session of C4S classes where we are taking MCQs related to finance. Okay, so first question for the session is companies, that is housing finance companies, regarding public deposit acceptance. Okay, so under there has been some regulations issued by the RBI under in this case. So under the new norms, what is the updated ceiling on the quantum of public deposits that deposit taking HFCs with minimum investment grade credit ratings can hold? Okay. So what is going on currently is that RBI now regulates housing finance companies too. Earlier, it used to be regulated by NH, National Housing Bank. Now, National Housing Bank is only responsible for the supervision, and the regulation part of HFCs is under taken under RBI. Now, what RBI is doing, as RBI is already regulating NBFCs, so RBI is trying to harmonize the regulations that are applicable to NBFCs with the regulations that are with HFCs. That means HFCs currently are operating under regulations which are slightly different from NBFCs. Now the task that RBI has taken is it is trying to harmonize these regulations into one. Okay. So in this case, what the question is asking is what is the quantum of public deposits now that this deposit taking HFCs are required to hold? And the answer for this is 1.5 times of the net owned funds. Earlier, this used to be 3 times. Now it has been reduced to 1.5 times. Okay, so this was the question, and this is in news in August 2024. Okay, now next question. So it is on the same topic that in August 2024, the Reserve Bank of India updated regulations on liquid asset requirements for deposit taking HFCs. According to the new regulations, what will be the required liquid asset ratio for HFCs? Okay. So RBI, it has done is earlier this liquid asset requirement was 13, and RBI has given a glide path that is small structural adjustments to be done in a longer duration of time. Okay, so that it doesn't hurt the companies. So RBI has increased this 13% liquid asset requirement to 15%, and this has to be completed till July 2025. Okay, so here the question was, what is the new regulation regarding this? What is the new requirement? So the answer is here 15%, and it has to be done till July 2025, and a glide path is given. So what is that glide path? It is given in the answer that now glide path is that they have to maintain 15%, and currently it is 13%. So in a phase manner that they have to achieve 14% of this requirement by January 1st, 2025, and ultimately 15% in July 1st, 2025. Okay. So this is aimed at improving the financial resilience among HFCs, aligning with their norms with those of NBFCs. Okay. This was what we discussed. Okay. Harmonization of norms of HFCs with NBFCs. Okay. Let's move on to next question. So in NPCI's UPI Circle. So this UPI Circle is a new product launched by NPCI. So question is, what is the maximum monthly limit for full delegation of payment responsibilities? So in this UPI Circle, what you can do is you can delegate uh, your access to your other people. So they are asking what is the maximum monthly limit here, and the answer for this is 15,000. Okay. So for full delegation under the UPI Circle feature, the primary user can set a maximum monthly limit of rupees 15,000 per delegation. Okay. Now, before moving on to next question, it is just a reminder that our UIIC AO test series is live. The test schedule of this test series you can find out in our Telegram channel as well as on the website. Okay. Links are given below. Now, moving on to next question. So next question is again on UPI circle, but here we have asked what is the maximum transaction limit allowed under the new delegation feature. So monthly you can delegate 15,000 per user, but this user will be given 15,000 per month, but he can do many transactions. But all those transactions, maximum limit per transaction would be limited to what? This is what this question is asking. And the answer here is 5,000. That is, person can make many transactions with this 15,000 overall monthly limit. But the individual transaction cannot be above 5,000 rupees. Okay. So this was the another case. So this is the explanation here. Okay. And this was recently in news also. Okay. Now moving on to next question. What is the maximum permissible borrowing limit relative to the investable funds for category 1 and category 2 alternate investment funds under the new SEBI guidelines? Okay, so the answer here is 10%. So let's discuss what these guidelines say. So actually SEBI has released new guidelines for category 1 and category 2 AIFs. Okay, so there they are saying that they can borrow money. Okay, but that borrow limit is till 10% of the investable funds. Okay, now another thing is, as per the new guidelines, category 1 and category 2 will be allowed to take loans to meet temporary funding requirements and day-to-day operational limits, but not for more than 30 days. So 30 days is another limit that we have to remember. Okay, next, such borrowings can occur maximum 4 times a year. This is another fact that we should remember, and it should not exceed 10%. So this is the maximum limit here. Okay. If AIFs intends to borrow funds for meeting shortfall in draw down amounts, then it will be required to disclose it in the this is the memorandum, private placement memorandum. There they have to mention this shortfall amount. Okay. Next is the borrowed amount shall not exceed 20% of the investment proposed to be made in the investee company, or 10% of the investable funds of the scheme. Okay. Next is SEBI has mandated to all category 1 and category 2 AIFs to maintain 30 days cooling off period between two periods of borrowing. So this is again a important fact. So these facts we need to remember for this SEBI guideline. Okay. So that's all for today's session. Thank you and have a nice day.